We've got, as I said, we've got Raphael Wood from Aurecon. Raf's the Principal of Sustainability and Climate Change at Aurecon and has over 25 years experience across environmental, financial and economic roles in both the public and private sectors. He provides advice to carbon market participants across government, liable entities and project developers, and has also provided advice to the federal government on environmental markets. He spent around 3 years working with Greencollar, who are Australia's largest carbon project developers. Raf uses his diverse experience and skills to assist corporates, governments and the broader industry to maximise impact and profitability, and frequently pops up at the Carbon Market Institute and other carbon farming forums to do that. So I've asked Raf to give us an update on carbon market demand and also to touch on land use demand and availability, which are two topics I was lucky to hear him talk about at the Carbon Farming Forum in Cairns in May. So thanks so much for joining us, Raf.
Pleasure to be here. There's a bunch of people I haven't met, and most of you. I was looking for John Gavin, but I noticed someone else from CoP or NRM is here. Sorry, I've lost it on my screen. Look, who is this guy and why would you listen to him? It will be my first agenda topic. Second is really around giving a general view of carbon markets in Australia, just so you can get a flavour. I'll be very quick, show you a few mostly graphs to talk to those. And then really Q&A is the best way for us to progress, to get the value out of the time we have together. I'll give you my NRM relevant background. I am a coal and gas geologist by training and experience. I spent 5 years in central Queensland, working in the coal fields there, and did a bit of copper gold in Northern Territory and in the South Pacific. I studied finance and became a commodities trader and stockbroker back in 1999, and spent 11 years as a stockbroker, financial advisor, portfolio manager with a wealth management company. Actually across multiple. And so I've got a background in broking and markets. I see everything pretty much as buy, sell or hold, and policy around what issues that affect certainty and risk, increase risk or decrease certainty. I had an epiphany in 2010 on the prompting of my then 5-year-old daughter to spend the rest of my life reducing the impact of climate change on her and my now 3 kids and their kids. So in 2010, I went to work for the Clean Energy Regulator in Canberra. It was then the Renewable Energy Regulator. We had the carbon pricing mechanism come in 2011, and I helped to design a number of the market aspects of that policy. And I then worked with the repeal team to, when the became a carbon tax and it was repealed, to close it down in a way that still supported the carbon industry, working with Chloe Munro, the then CEO, to set something up, and we set up the Emissions Reduction Fund. I was on the architecture team, implementation, and I was the lead, the head of implementation and design of the Emissions Reduction Fund, and also methodology implementation. So worked a lot with government and Iraq, and at the time Andrew McIntosh. So I can field enough questions there if you want. And I spent 5 years there. It was the hardest 5 years of all of my life, and that includes the jungles of the South Pacific and trading the stock market through the tech wreck and then the GFC. So I have absolute utter respect for the bureaucracy and government. I went to work for Greencollar in 2015 because I didn't understand the supply side. I'm very much about understanding supply, demand and price and markets, and I didn't really know anything about the supply side. So working there, I got to spend a bit of time in a bunch of NRMs, working particularly spent a fair bit of time up in the Burnett Mary and in southeast. So it's changed its names, but Healthy Land and Water, and across central lands in New South Wales. So I learned a bit about the supply side there, but what you should understand is I actually learned how good things are done well and things are done poorly, and how projects are implemented well or implemented poorly, and the real needs and issues that face landowners when making carbon decisions, and potentially some of the things that they should have been told but weren't told, should be told but aren't told, past, present and future tense on all that. I started my own advisory firm in 2018, Market Advisory Group, and have been doing supply, demand, and price forecast in the market for since then. That business has grown from just me to 25 staff, and we now provide advice to all of the major demand side entities: Rio Tinto, BHP, Chevron, pick them all, Santos. I'm thinking Queensland there, but Mitsui, all of the big oil and gas and coal developers on their carbon procurement strategies and how to invest in carbon projects and purchase ACCUs from high integrity projects. We also do due diligence on projects. We do stratification of human induced regeneration projects for project developers. And we find and develop environmental plantings projects for our clients. I'll mention it several times here today. Telstra is one that's public. We help them to purchase Yarrawit property in north central New South Wales and to implement a environmental plantings project on that. We also have a managed fund which allows investors to invest in environmental plantings projects across Australia. So I've got a very detailed bottom-up view of the constraints and impacts of carbon markets. Here we go. I have, in terms of the, I'm going to pause there and go. That was deep and back. But I've been working with NRM, the NRMs probably since 2011. So not necessarily, again, I haven't met a lot of you, but really I do understand, I think, where you're coming from. So I'll try to tailor the first pitch of the presentation to you to just cover off general markets, and then we'll go straight into the real Q&A, the real issues. I'm going to share my screen. I assume that'll work. This is not my first rodeo, so I should be able to get it working. Yeah, okay. Okay, I'm going to ask if you can see that price graph that's on the screen.
Yeah, it's come up.
Okay, great. And I've got two windows open so I can see you all, and I can also see the presentation. So we produce a monthly report that goes out to subscribers who subscribe each month, of course. And in that we cover off on the markets themselves, what's happened in the markets, prices up and down, the prices that have traded in the last month, and then we look at specific issues around the forward price curve. This is our forward price curve for carbon in Australia out to 2030. We look at forward trades. That's more for the investment banking world. We look at demand, changes to demand. Where's the demand coming from for carbon for ACCUs? We look at issuance from the government. Supply, what supply can come from different methodologies, and we put all those together to look at what the costs are of implementing new projects. I'm just going to scoot back to this one slide, from which I think we can talk in a few different directions. This is the price graph for carbon for the last 12 months, a rolling 12 months. And you can see that it's had a low of 26 back in August of last year. And it rose up pre-election to a high of about 38, 39, and has drifted back to about 32 now. But the other thing you notice is we quote two prices. One is the unspecified unit price. So there is the ACCU, the carbon credit that's created from any project, is often then split into where it comes from. And you can see the different project types. So Savannah burning are the orange dots. We don't draw a line through those because they are very different. They're not like for like. Each project is different. But human induced regeneration is the green line. It's the main volume that's created and traded in the market. It's the one that affects you all probably the most at the moment, and all the issues around high integrity projects and what's doing to the land. How landowners coping with these issues. And then there's the base price for the blue price, which is called generic. It's not disclosed, they don't disclose which method it comes from. And that's generally landfill gas, avoided deforestation in New South Wales, and lower integrity other projects, including human induced regeneration. Now I'll pause on this slide just to say it actually says 1,000 things. the first thing I find is that it's dropping. We've got certainty of demand policy in Australia. You may or not be familiar with the safeguard mechanism, which was implemented, became Australia's carbon pricing policy earlier this year. That created reset emissions from facilities with more than 100,000 tonnes of emissions. So this is now your base, this is now your start point, and every year we're going to decline, on average, your baseline by 4.5%, and you need to stay below that. And if you don't stay below that, you have to buy credits. They can be ACCUs, and if you do fall below it and you improve better than your forecast or your baseline, you'll get issued a new unit, which they've created, which is called a Safeguard Mechanism Compliance Unit, SMC. It's really important that you note that. That's probably the key change to the carbon markets in the last 12 months. Is we now have two carbon markets. This one is the ACCU market, Australian Carbon Credit Unit, and then the SMC market. Now that won't trade or produce a credit until 2026. You've got plenty of time to catch up on that, but it will in effect drive the price of ACCUs. I'm not going to go into the detail of that today. Maybe in Q&A, if you're interested, we can chat about it in more detail. But what's interesting is since we've got certainty of demand, the price has actually fallen. And I find that fascinating because uncertainty should increase demand, and it does. So scrolling down to this slide, demand is increasing dramatically in the market over time, particularly out to 2030, going from current gross demand of 20 million up to gross demand of about 64 million, so tripling. However, as some of you may be aware, there are a lot of current projects that are producing carbon credits that are trading them in the market and selling them in the market. And I'll summarise this again. We can come back to it in Q&A. But what's worth noting is the Australian carbon market was largely, the buyer was the Australian government up until about 2020. And that was through a carbon abatement contract, a 10-year contract that landowners and projects entered into to sell their credits to the government at a fixed price. The government has made a decision just off to the left of that price screen over in January 2022, which saw, is that correct? Yeah, January 2022, which said that all of that volume, 120 million tonnes contracted to the government at an average price of $13, was able to be released from the contract and could be sold to the market because there was no supply. All the supply was being sold to the government, and the big developers and emitters were struggling to find any carbon credits. Landowners were stuck in a contract with the government at $13 when the price just off to the, I've got the wrong one up. Just off to the left was up at $60. So landowners were getting upset that they were being asked to deliver on the contract at $13 when the carbon price was 60. And so the government made a decision to release those units to the market, let landowners get the market price and create supply, which saw the price plummet back effectively down to $26. And actually it was low. It was down about 24 and then it rose up and then went down again, but just off to the left of the screen. But that's important in that landowners, one, can sell in the market now and they're not stuck with the government contract. But most importantly, there is a lot of supply, 120 million tonnes. And if we go to our demand curve, we've got only 20 million tonnes at best in demand. So there's probably 4 or 5 years of supply that's going to come from existing projects to meet the existing demand. And that's why our price forecast, which I've just gone past, shows that the price will be flat. So we forecast, we've been forecast, we started this graph has had the same font and format now for 5 years. It was the first carbon price that was put out in the market in 2019, and we just used the same font and format for tradition. But it shows a very flat few years where the carbon price shouldn't go up too far. There's no real demand reason for it to. Plenty of supply, not a lot of demand. And so we're forecasting the price to be quite flat. Now the price will kick up later in the decade, and actually off screen it goes up fairly dramatically for reasons we can go into in the Q&A. But it's really interesting for you to know when talking to landowners that the carbon market is pretty static. It's go up and down, but within a range, going back to that sort of price forecast. We forecast it's going to range trade from about $33 through to about $40 for several years, and rises slowly, almost with inflation in that time. And I think I might just stop there, sharing the screen, and look at you and say, there's a lot behind that. We don't just put a finger in the air. A lot of quantitative data. We work with most of the demand clients in the market, so we have some qualitative data on how they're behaving. So we think our demand's pretty accurate. We're also pretty conservative on our supply, having worked in the supply industry and working still in developing new projects. Whilst there's potentially a lot of volume that can come from new projects, with the CSIRO has got some really high numbers that they think, projects that can be done in the agricultural space and the land sector. We know the challenges of actually getting carbon projects up are quite high, and so we're quite conservative on our supply. Was there a hand? Did I see a hand go up? Good if it was. So what does it all mean? For your landowners and for carbon, who I expect that's the focus of your day, there is a carbon price. It is robust. Plenty can be done. Plenty of carbon projects can be done, and plenty of profit can be made from doing a carbon project. The price isn't going to go through the roof. Don't look at the European market at $180 a tonne and say, well, that's where we're going to go. There are completely different supply and demand dynamics between Europe and Australia. One being they don't have any land to plant, and we've got plenty. It's just straight out. You watch the Tour de France now. It's on, just for those, I'm just seeing who nods there, the tired ones. But the European countryside is productive land or traditional forest, and so there's not a lot of land for them to regenerate. We've got access to lots of land that we can integrate carbon projects into agricultural systems and landscapes, and so we can produce a lot more supply at lower prices than Europe can. So the Australian carbon price is $30-ish, $35-ish, plus or minus a few dollars for a while, and it's the other The other key thing to note out of that, and I will share screen again because there were 100 things to talk about on that one slide, that one graph. What you'll notice also is that the lines are different. Why is the green line higher than the blue line? Well, landfill gas and avoided deforestation, that make up the volume in the blue line, are considered the lowest. Quality is not the right word. They're just considered the base unit that have no premiums applied to them for biodiversity conservation, community, or any Indigenous benefit. The green is human induced regeneration. It trades at a slight premium. Note, it used to trade at a slight premium. It doesn't currently trade at a premium, more than about 50 cents to $1. It's not a big premium. And that's because human induced regeneration traditionally had a biodiversity benefit that was factored into the value of the unit. People like the Qantas and Telstra, who purchase units for voluntary purposes, want to purchase good quality projects that have as much positive impact as possible. So they'll pay more for something that has, say, I'm not sure I can't remember which region is Cairns, but there's an environmental plantings project just south of Cairns at Babinda Creek, which has local Indigenous groups working on revegetating sugarcane country and rebuilding wetland, which is taking the sediment and runoff from sugarcane fields and putting it through a wetland before it hits the river and heads out into the reef. So it's reducing nitrogen, reducing nitrogen impact and reducing sediment impact. Now that project would trade at $60 a tonne because it has a lot of co-benefits. It's also a very small project and it needs a higher price to make it economical. There's a couple of reasons for that. But something that has Great Barrier Reef impact, or as you can see from the orange dots, say an Indigenous co-benefit, most of those savanna burning projects that are trading at a really high premium are ones that are run on Indigenous land by Indigenous groups and communities, and it can be seen and should be able to be shown that a lot of the income flows back to that community. That attracts a premium. It's a great story for the likes of Telstra and Qantas, who are want to go carbon neutral for a reason, to be having an impact, so it has a greater impact, and so it trades at a premium. That's just interesting to note that that occurs. But coming back to your day-to-day, for those who are working in Queensland and New South Wales in particular, but also Western Australia in the wheat belt. I saw wheat belt NRM there, I think, Carla. There are a lot of human induced regeneration projects taking place out in those regions. It's just interesting to note that where the premium used to be there, it isn't there now, and that's got a lot to do with the critique, fair or not, that has been applied to human induced regeneration from the Australian Institute and Andrew McIntosh, namely from ANU. Just tell me if I'm stepping on your toe there, Reg. But there's been a lot of questions raised about the integrity of that. We can talk about that more, and happy to. I've got probably one of the most up-to-date views on that from my role on the board of the Carbon Market Institute and what we do in human induced regeneration, integrity measurement and due diligence. So I can talk to that in more detail. But just note that carbon prices are different depending on the project that you're undertaking. And again, I'll stop sharing so that I can look at you. I'm going to stop there right on the 2:30 mark and ask if there's any immediate questions.
That was great, Raph. And yeah, thanks so much for that overview, and also for just telling us a bit more about your background, because I think it's, just really useful to know where you've come through and what you've been involved in so far. I've got some questions, but I want to open it to the floor first. So does anyone have a question that wants to raise their hand? Look, there they go. So I think I saw Fee's yellow one go up, and then we'll have Chris Norman. And then we'll have Susan. Okay, so
Thanks,
Fee,
Reg.
Chris, Susan.
Thank you. Raph, I was just wondering, is the predicted change after 2030, is that anything to do with international markets opening up? Like you mentioned that, we have a different supply sort of situation in Australia. Is that when they're thinking that perhaps we might be able to sell more internationally, or?
Yeah, I think that's one of the contributing factors. Just let me pause. That door's shut and that heater's on, and I'm in Canberra at 3 degrees and it's apologies. And that dog will want to come in as well. But to answer your question, the rise post 2030 is multiple factors. I'll just give the headline on a few of them. Demand is increasing materially. Australia has a 2030 Paris commitment, which is 47.5% or 48% below our 2009 levels, or 5 levels. I always forget that. We call it 48.5%. And that is predicted, or that is modelled to include an 83% renewable energy penetration in Australia. So by 2030, we should have 83% of our energy generated from renewable energy. That's a big ask. But if it is achieved, then any future target we set, and they're talking about the scientific target should be around 70% reduction by 2035. That would be a doubling of the target. That has to come from somewhere that's not renewable energy, and renewable energy is the quick win. So mostly everyone's expecting that facilities, smelters, mining operations, and power generation, or whatever's left in the power generation world, that's not 83% renewable, will be having to bear the load. So demand, and it's really tough for emissions to drop that quickly, and so there'll be demand for ACCUs, because the demand for offsets will need to be there while people make also corporates make their decarbonisation investments and change. So that's the main one, is that demand is going to increase post 2030, but also supply is going to decrease. Human induced regeneration has got a couple of quirks, and one of those quirks is that if it's not a forest at year 15, you have to stop issuing carbon credits until you've caught up for any shortfall. So if you've got a forest, if you've got an area of your carbon project that didn't achieve forest cover by the year 15, it actually has to be removed from your carbon project area. And if you halve that, imagine only half of your project actually achieved forest cover, that's 2 meters tall and 20% canopy cover, then that 50% that you thought was there isn't there. You don't get another credit until you've been caught up. You have to give back 50% of what you have been issued to that date. So it's actually quite dramatic, and we should talk about this further at some point, because it is one of the critical issues for a landowner. If the land project developer got it wrong, that by 2030, which magically is about year 15, for most carbon projects, which 2014, 15 and 16 were the peak years for human induced regeneration, that correlates to a drop in supply. But also environmental plantings is much more expensive. Environmental plantings is about $30–40 per tonne just to do the project, and if you chuck on a profit, anyone who's investing in those projects needs a profit, or developing those projects above what it costs them, then you're talking about $60 or $70 a tonne just to produce a unit from there. So increasing demand, decreasing supply, increasing cost of new supply are the main factors. We do factor in our high case on that chart that by the end of the decade we will link to some markets. So right now you can actually buy Australian carbon credits from an international perspective and surrender them in Australia. Who does that? Microsoft does that, Apple does that, a bunch of globals who've got a presence in Australia buy carbon credits and surrender them. At the moment though, they can use international offsets to do that, but they still use ACCUs. But what I'm talking about, and I think, and you should be clear that I think that's what the question was if we link to, say, Japan or Korea or California or New Zealand, if we link to any of those economies and we link our compliance market, so our safeguard mechanism versus the clean air policy in California, or the inflation policy in America as a whole, or the New Zealand ETS to Japan and Korea, that net demand, they aren't suppliers, and if they are suppliers, they're at a much higher price. So I think it's quite likely we will link New Zealand probably first, Japan second, Korea third, probably America by the end of the decade, US of A, I should say, and maybe Canada. And that would, our compliance markets, that would create net demand. Only Canada is a net supplier of low-cost carbon projects. So I hope that answers, that's sort of the four things that are changing the price at the end of the decade. Was it Susan next?
Is Chris Norman next?
Oh, Chris.
On my schedule.
Really asked so that really answered my question, what was happening at the end of the decade, so I'll pass over to Susan.
Thanks very much for that. I think you almost answered my question too. I think I noticed on your graph there was one dot for environmental plantings that looked much higher than everything else. And so, sorry, I'm not overly familiar with all of this. Are you saying that if you have environmental plantings, you will actually get paid a lot more for them?
Yeah.
Right?
Yeah.
That dot on the right.
The blue dot up here, if everyone can see my mouse, is what we're referring to. I can even do this, look at that, up there. It was terrible effort at drawing, but you know what I'm talking about now. That trade was at 52. Now, yes, that is absolutely true. Two reasons. One is it costs more to do an environmental plantings project. There is actually a capital expense. And for those who are unfamiliar with the differences, human-induced regeneration, your real cost of a human-induced regeneration project is future loss of income from destocking because you've allowed a forest to regenerate. And so if there is or isn't, depending on your vegetation and your soil type, a decrease in stock, you have to take that into account. That's really your cost. There's a couple $100,000 worth of measurement verification and project registration costs at the start, but other than that, there's not a lot. Whereas environmental plantings, you have to plant the trees, you have to buy them, you have to get the seed, grow the seedlings and plant them, and that's the cost of planting. That's the highest cost to your projects. That requires capital, and that capital has a cost of borrowing or a cost of some kind of cost, as well as just the physical cost. There's a cost of borrowing. You have to take all that into account. And so the general real scale price, I'm just going to tell you that the spot market just traded. I just saw a ping up at $30.75 generic, so quite a bit lower than that price. I get pings every time the market trades, and I just saw one at $30.75, so it's fallen even further this week. So the question is, it is higher, but it also, most importantly on here, not just the cost is higher, but it has a higher premium. And the reason being, it has three things going for it that others that don't bring it into disrepute or critique. One, there was no tree there before, and everyone can see there wasn't a tree there before, and now there is. So if you can see it from the satellite imagery or from any kind of drone footage, you can clearly see clear paddock. Now that clear paddock is now forested. So there's an integrity to the change. Human-induced regeneration, one of the main critiques is that it isn't really changing. And if it is changing, it doesn't matter if you had a carbon project or not. It just the rain makes it change. The weather makes it change. I don't think that's true. Please don't accept that as me accepting the premise. I think that's incorrect. But it is the thought, whereas environmental planting, there's no issue there. Also, you are clearly re-establishing biodiversity and conservation values because you're planting them either riparian zones, you could be planting connectivity, or just revegetating land that shouldn't have been cleared. A lot of the Victorian catchment management authority areas, the land that was soldier settlement cleared, shouldn't really have been cleared, a bit too steep to run cattle on. It's just an erosion problem, and it's not that really productive. So just planting that back to native, native forest. Environmental plantings are almost always a mixed species native forest. Planting that back has biodiversity conservation and erosion, etc. values. So it's got that real benefit. And the other one is just hasn't come under attack. So it hasn't been. It just hasn't had the because we haven't had a lot of projects. We haven't had any opportunities for attack other than the future one, which is live and present, but it's for future tense, is planting Australia's food bowl. Environmental plantings projects are traditionally thought of as block planting, taking your 1,000 hectares and planting fence to fence, lock the gate, walk away, create a fire issue and a pest issue and all kinds of issues. Environmental plantings project developers are keenly aware of that future issue. We are developing several thousand hectares of projects on grazing properties in Queensland at the moment, and we are planting an open woodland. I suppose, good project design is that you plant an open woodland, what is often referred to as the 1788 woodland, what was there before, and creating shade, evaporation protection, wind protection, but maintaining the agricultural productivity of the land. And I'll just make one more point here, and this is an investment point, so I'm at my heart an investment markets person. You cannot recover the cost of destroying the agricultural value of the land from a commercial perspective. That is the biggest impact to end the commercials of an environmental plantings project. Therefore, it makes no sense to plant a property that was once worth $3,000 a hectare and make it worth zero. You can never recover that cost, let alone the community outrage and the social license to operate, which you lose immediately. You just can't economically recover that. And I've had conversations with Queensland Farmers Federation and the National Farmers Federation about that fear, and my answer is you shouldn't worry about that because it actually doesn't make any economic sense to do that. You'll be planting those areas of your property, either those areas of property that don't have high agricultural value, or you'll be planting in a way that allows your agricultural pursuits to continue and agricultural value of the land to be maintained. That's a future problem because we're not doing it at scale yet, but it'll be the critique that comes. You can't eat trees. It's already been said by several National Party politicians, and it's true. It's the critique that's going to come. But I just want you to have a little bit of two things. I want you to know that that's the case from project developers, knowing that is an issue and they're not designing projects that are going to cause that kind of concern. But second, engage with the carbon project developers because there's a little bit of learning by doing in this space. There's a lot of science and data that in some agricultural systems and in some areas that replanting at 30% canopy cover and mixed species was going to be great for soil, going to be great for stocking rates and sustainability of the land. That may be true this paddock, but not that paddock. And it really does require experts like yourselves, organisations that come in independently assist in the carbon project design phase to try to get that right and manage it and help the project manager manage it over time so that is actually what we achieve and that the environmental plantings industry goes forward with positive steps as opposed to 10 years from now getting smashed for having done it wrong. So I'll stop there. I think that answered the question.
Thanks.
That also posed like 5 more. So.
Thanks, Raph. Steve, you've got your hand up.
Yeah, look, I have a bunch of questions, but I'll just touch on 2. I'd love to sit down and have a bit of a yarn with you sometime. You touched on the sort of risk associated with HIR in, potentially not delivering in time. And, I've seen quite a few projects taken up in marginal areas, which I suspect will bear out. The first question is, I guess, that profile in the carbon price, have you sort of factored in that risk in terms of the HII, given that's such a big contributor?
Yep.
Yeah.
Yep. So we have.
Okay.
From existing supply, we are forecasting a reduction in the supply from existing carbon projects of about 10% on average. We think there's some that'll be fine, and we think there's some that'll be more like 20 to 25% failure, lower than expected production. In new production systems, so new projects, which are to the right of from anything from now, we would expect them to have to be quite conservative, even though there's still 13 million. What do we got? 3 million hectares, I think, in the Western Australian rangelands alone that can be developed. We don't think all of that can be. We don't think it'll all achieve what it wants to achieve. And that means we're at a point of maturity now that project developers don't just go in and put the whole thing under a carbon project. They're much more specific about what's in and what's out. So we think that even though you might have that 3 million hectares of land, what actually gets into a carbon project will be much smaller. And that's with integrity, not failure in the end, but actually upfront maturity and integrity and design. So I just want to make sure that point, because I don't want to be, you'd think I'm saying it's going to be done poorly. It's just changed. The way it used to be done, we've learnt lessons. 10 years later, we do things differently, and that's much more accurate, but much more constrained than what it was in the past.
I was looking at the shape files now that are sort of released on the CEAs on some of these projects, and you sort of look, as you drill down into the CEAs and look at the pixel, if you like, you wonder how they could have arrived at some of these sort of areas that potentially are flagged for growth. Anyway, thanks for answering that one. The other one is we talk, and mostly our projects are sort of methodologies, CER methodologies. What do you see the demand internationally for the development of, say, gold standard or other approaches in Australia that target in the long term, the international market?
Yeah, there's 2 points to make there. I'll try to be quick. One is the Australian government doesn't currently recognise gold standard or VERA projects in its carbon accounting. So if you do a gold standard or a VERA, they're the two main alternative voluntary markets. One of those methods, then you have to actually buy when you surrender that in Australia or anywhere. You need to be aware that the government has actually counted that forest, if you grow in a forest, in its own natural regeneration of our ecosystem, and so it's accounted for it in its Paris commitment. Therefore, yours is not additional. You have to go and buy an international offset and surrender it in Australia to make additional. I know that sounds weird and complicated, but the point is it's just not recognised in Australia as being additional. So that's one constraint why that doesn't happen at scale. That being said, some companies have done a great job of doing this, and Carbon Neutral over in Western Australia under Ray Wilson and that crew have done a reasonable job of managing both international VERA and the Australian carbon credit market. Again, noting they learned by doing so. Maybe some mistakes were made, but they're high integrity operators. I don't know a relationship with them other than just they've been around a long time, and they do it fairly well. So that's one issue. The other, I forgot my other point now. International using the other one is in soil carbon and other methodologies. It's really, you need to be really aware, and I think you all should be totally aware in your day-to-day talking to landowners who are getting approached by other soil carbon methodologies from around the world. The way in which those modelled methods work doesn't necessarily work in the Australian ecosystem and the Australian soil profile. What works on the the west coast of the US is different to what works obviously out there in Brigalow country. Just completely, or in Western Australia in its entirety, has got a completely different soil profile to everywhere else in the world. So really be careful around using those international ones. you really want the highest integrity. When anyone comes to talk to your landowners or yourselves about doing soil carbon projects under international methodologies, you really, and they almost certainly then say, you do use this one because the Australian one is too onerous and too costly for measurement and verification. As soon as someone starts to dodge around governance and integrity, it's a bit of a red flag for me. So I don't know the guys up in central New South Wales or sort of northern New South Wales will know of a project up there that was done and Microsoft invested in it. That methodology is just inapplicable to Australia, and it's actually quite. I'm happy to have the conversation offline, but it's quite an abysmal method for that region, and its integrity is worthless. And I say that not as an opinion. I work for, we advise probably several million offsets per annum in terms of procurement, and none of our clients will touch those kind of projects. So that's just because you can do it doesn't mean someone's going to buy the credit off you later. That's just the key for you to take into your day to day. And maybe follow me up later with an email and we can chat about it, Steve. I'm always happy to share insights and specifics with NRM groups, because you guys are on the coalface, if you'll allow the pun, of this industry. So anyone feel free to connect with me. My email's in the is in the invite here.
Thanks, Ralph.
Thanks very much, Raph. Thanks, Steve, for the question. Laurel's got a question.
Yeah, so my question was around ACCUs from blue carbon projects, and if there's any anticipated trends or anything based on the, I guess, integrity of those projects or anything?
There are a couple of trends, Laurel. Blue carbon is considered the darling of the offset market. Mangroves, turtles, fisheries. It's seagrass for habitat for everything. If we can repair those and regenerate those, we do really make a large impact on biodiversity and conservation. So they have a much higher premium than and if I was to go, I'm still sharing. I'll stop sharing. If we looked at that graph that I just unshared, they'd be trading at $100 a tonne because of their premium, but they're also very expensive. So there are three main trends that are emerging in blue carbon. One, you must separate two kinds of blue carbon. One is avoided damage, so protecting areas that already have mangroves and seagrasses. There's a massive trend globally away from that. That's the avoided deforestation, avoided clearing methods. The red, if you look internationally, avoiding destruction. They're considered unadditional because you should just mandate that. The government should just say, don't clear the damn stuff, right? Don't damage it. And so that there's the real. I just said that's what people are saying. That's just what the view is it should be regulated, not incentivized. And so there's a real trend globally away from avoidance units. So that's avoided deforestation. It's landfill gas, methane destruction, or anything that avoids emitting renewable energy, etc. Renewable energy used to make up most of the international offset market, and it's now zero because the market's moved away from avoided emissions, and they've moved to sequestration or removal. It's the main word for it is removal units. Those projects like soil carbon, human induced regeneration, and environmental plantings that remove it from the atmosphere, directly remove the emissions that you produced. So that's a big trend. So in blue carbon, I'd say there are two different trends. One is the huge projects we're seeing in Pakistan come out of some of the Southeast Asian countries, which are protection. They'd be less attractive, but those projects that are replanting mangroves where they've been cleared, and I'm going to fork this one off into two as well. So those where it's been cleared and now you're revegetating and protecting mangroves and seagrasses, high value, super high value. Think South Australia, if anyone's from South Australia. So just north of Adelaide, there's some salt mines that are flooded mangroves. if you reintroduce the flow back there and get that back to mangroves from a toxic salt environment that it is now, that's clearly a benefit, has benefits all down the estuary and the ecosystem. So that kind of thing, great. Be careful of projects that are revegetating natural disasters. There's a fair bit of stuff going on, and for those who are in the Gulf, on the Cape, you know that there was some massive losses up in that area of mangroves, that hundreds of thousands of hectares. Regenerating that, I think, trying to empty the sea with a bucket. Like if you're fighting against nature by replanting, and not that they're bad, and then maybe we have to try, but they're the ones that the fork is clearly it's been destroyed and you're repairing it, and other one is maybe it's a natural outcome. And the third main point is the biggest worry about blue carbon is it's near its coastline, and if we see a 1 metre rise in sea level, we might see that a lot of the work you did to re-establish mangroves and seagrasses actually gets flooded. So that's a permanence question. That's the general term. The permanence of the sequestration is a question. Stop, pause, go to the next question. There's 6 minutes left. And again, Laurel, please just to send me an email if you want to chat about that further.
Oh,
Thank you.
thanks so much for that, Raph. If nobody else had a burning question, I just might ask a question to try and bring it together a bit, because touched on so many things, and it's a really great overview, and I think you'll probably get lots of emails afterwards, Raph, from everybody in the group. But I guess what I'm wondering is, and this sort of goes back to the earlier question, a bit about land use and just a bit about where we're heading. So I guess if for regional NRM organisations, so we're into high integrity projects that deliver co-benefits, that's what we care about. So where do you think we should be putting our energies over the next 10 to 15 years to be able to get investment into those kinds of projects?
I think one of the things you have to do is adopt, first there's the current projects and then the future projects. I'll answer that in two parts. On the existing projects, I think working with landowners on collecting data, on management data and ecosystem data on how an ecosystem recovers through revegetation or natural revegetation, and how to best manage that from an agricultural perspective, as well as the natural capital value of that land, really critical. Just stay engaged with that, because there'll be a lot of upset as these 15-year milestones come, or a 10-year milestone comes in just few years, as things start to change. And so stay engaged with how to best maintain and get value out of what you're doing on site. Maybe start to get biodiversity value out of your carbon project under the nature repair market, if that ever gets voted through, or some biodiversity market that comes in the future. So focus on extracting as much value from existing projects as they start to reduce in their supply or become a little more stressed. But I would say blatant, like absolutely, it's almost biased, this one, is we're at the cutting edge. I'm comfortable to say that what we're doing, John Gavin said it was the case when I met with him in Cairns the other day, that he thinks what we're doing here is novel. Grazing in and around forest and the establishment of forest on large scale agricultural, particularly grazing land. I'm actually talking grazing land specifically, and how to implement canopy management and woody weed regrowth on a mixed species environmental plantings, how to integrate soil carbon in between rows, in between plantings, what you can do to assist in creating a sustainable agricultural property that has a carbon project on it, as opposed to the general assumption, which is just going to be a carbon project, lock the gate. So that is the key, in my mind, that is the key agricultural system problem to solve, is how we integrate environmental plantings and soil carbon. Forget soil, actually, environmental plantings is the main game for the future. It'll be where incomes are made and sustainable agriculture is achieved if we can do it right. And that might be a bit of a pipe dream, but I think that's where NRMs play an absolute critical role in the next 10 years.
Fantastic. Thanks so much, Raph. We might just leave it there because we are sort of running a tiny bit over time. But look, it's been wonderful having you. I know everybody's got a lot out of the conversation today, so thanks so much for that. And no doubt we'll catch up with you again in the future.
Yeah, no worries. And I'll make one last statement of offer. If any of you have critical issues you face in your region and you want to have a longer discussion, I really am. My passion is to share information and educate. So feel free to reach out. I'm happy to dial into any board meeting or any strategy meeting you've got where you just want to upskill staff, even a training session. Just let me know. I'm really happy to put an hour or two of my time away for each of the regions. And I think I promised Kate that. So just feel free to, just reach out, and I'm really happy to join in and answer some more specific regional questions that you might have.
Fantastic. Thanks so much, Raph. That's a wonderful offer, and I'm sure we'll definitely take you up on it. And I know I'd speak for everyone in the virtual room, so thanks so much.
All right. Awesome. Thanks for having me. Talk to you soon.
See you.